So let's talk about how real estate protects in a down market, unlike stocks or maybe even crypto. Like real estate value. So when you own real estate, the biggest thing is protecting your cash flow, right? It doesn't matter the value of the real estate. And that's hard to wrap your head around if you're not invested in real estate because it's every buyer's biggest fear is that they buy something and then the price goes down. But at the end of the day, as long as the rent is staying close to the same and you're cash flowing, you can withhold that storm, right? Which is a lot harder in like a stock market or a crypto market when it crashes.
Well, there's a bunch of variables I think that you have with real estate that you don't. When you buy a stock, you think of the control you have, really. I mean, the only control you have is selling or buying, right? That's it. And with real estate, you do have more levers. I think that's the important piece, right? So if the market is becoming really competitive, then there are things on the management side that you can do to try to keep your tenant there long term, right? And to mitigate your cash flow long term, and you can kind of weather the storm. So you have a tremendous amount of flexibility and more control, I believe. Although you have to know how to do it, you have to understand that, and that is really literally the purpose of this channel, is that you have to understand what are the things that I can do to mitigate my risk in the future as markets change, and they will change. That is the most important thing.